Hello and welcome at Value Investing, where we try to estimate the intrinsic value of different companies. As usual, the disclaimer: this is no financial advice and just my personal opinion. And now, let's hop right into the video. In today's video, we will have a look at Walgreens Boots Alliance, ticker symbol WBA, which are trading around $21 and are down around 41% year to date. Walgreens has a terrible history over the last few years if we look at their performance of the stock price. They do not really have much going for them over the last few years. If we have a look at their income statement, we can see that their revenues over the last few years did also not really increase, and also their gross profit stagnated a bit and is not really increasing over the last few years. The only thing they have really going for them is their dividend history of 46 years of dividend growth, but the growth in recent years has stagnated quite a bit. So let's have a look at Walgreens with the stock valuation tool. I've plugged in all the values for Walgreens. Currently they have a nice starting dividend yield of around 9%, but please keep in mind their earnings per share over the trailing 12 months is negative. The first valuation which we will use to estimate the intrinsic value for Walgreens is Graham's valuation. One thing which you can see is I have used the forward projected earnings per share from Seeking Alpha, which you can see here, it's around $4. And with this EPS growth rate projection of 1% and considering the current yield of AAA corporate bonds, we get an intrinsic value of around $25. The multiples valuation was kind of difficult to do as there are not really many comparable companies. Comparable to Walgreens from my point of view is CVS Health Corporation. With only one competitor in the multiples valuation, I left this out. Coming to the discounted cash flow analysis, if we look at their cash flow over the last few years, we can see that it has fluctuated quite a bit. And especially in the last few years, it was decreasing. So I projected a growth rate of around 3% for the free cash flow. With this projection, I calculated the future free cash flow and the present value of the future free cash flow. If we sum them together, consider the cash and cash equivalents and also their total debt. In addition to their outstanding shares, we get an intrinsic value of around $29. Now let's have a look at the dividend discount model. Walgreens is known for their consecutive dividend increases over the last few years. But what we can especially see here in this valuation that the growth rate over the last few years has decreased very heavily. So with these decreases, I projected a growth rate of 1.5%, and this is below the target inflation rate of 2%. So I'm not really happy with that. But anyway, I have calculated the intrinsic value, which gives an intrinsic value of around $27. One thing which Walgreens did quite well in the last few years is decreasing the outstanding shares. So we can see that they have diluted shareholders from time to time, but always tend to buy back outstanding shares. And they did not really dilute it over the last few years. Having said that, now let's have a look at the output tab. Considering all four valuations, but leaving out the multiples valuation as there is not really a good comparison, we get an intrinsic value of around $27. Considering the current price of around $21, we could buy in with a 10 and 20% margin of safety and would still be in the acceptable buy range. But as said, the revenues are not really increasing for this company, so I personally will stay away from Walgreens. I would be interested what you think about this company or what company you would like to see in the future. So please leave a comment down below and also like and subscribe to my channel. This would really help me in growing the channel faster and produce more content. And as always, thank you for watching.